So why do we use ratio analysis? Ratio analysis allows us to compare two different companies or even two different industries. For example, have you ever wondered which was more profitable, grocery stores or airlines? Have you ever thought which one's more efficient, Walmart or Target? Those are the kind of questions that you can answer when using ratio analysis. Ratio analysis is how most investors actually end up making their investment decisions. By looking at a whole bunch of very complicated ratios, they're able to determine which companies fit their investing strategy the best. Now, I'm not saying that you're going to be a professional investor after these few videos. You will learn how to develop your own ratios, and at the same time you'll be able to understand the most common ratios used by professional investors, consultants, and business managers. And don't think that in case you're not going to be an investor, this isn't invaluable to you. The very bottom line is, we use ratio analysis to compare companies and industries to each other so that we can better understand which investments look the best or where we can possibly improve our own companies. So, how do we do ratio analysis? Well, you see, at the core of it, ratio analysis has 5 kind of main buckets of individual ratios. You have activity, solvency, profitability, liquidity, and valuation. Inside those 5 buckets will be a handful or so of traditional kind of go-to ratios. And then once you kind of understand how these ratios work and their goals, then you can actually build your own ratios, which I'll show you, which is something that I've done, and I've found a lot of joy in doing that. And that's something that you can learn as well. But inside those main 5 buckets, you should be able to understand a lot about how a company operates. Now, all these ratios use the financial statements one way or another. And as we've seen in the accounting and finance courses, not everyone writes their financial statements the exact same way. While yes, there is kind of a general template people use of sales at the top and kind of profit at the bottom, and on the balance sheet, kind of assets at the very beginning and then equities at the end, it's still not something that everyone has the exact same line items all over the place. And since you're comparing mostly 2 or more companies to each other when you do these kind of ratio analysis, you really need to understand how to get a company into a common or kind of template kind of financial statement. Now, we could totally spend an entire course just showing you how to combine certain line items and other line items and all the details and complications that go around doing that exact task. Luckily, we don't have to. You see, there are companies out there that actually do this for you automatically. These companies create what we call common form financial statements. Now, these are the same kind of companies, or some of them are the same kind of companies, that professional investors use. Bloomberg, FactSet, S&P Cap IQ. Those 3 are where most professional investors get their information about how they evaluate companies and what their new quarterly earnings look like and things of that nature. Now, those 3 are also very expensive. And so there are some free alternatives that we're going to point you towards in this course so that you can actually be able to follow along with us and get the most updated numbers and the exact same template that we use as well. So for the free side, you have companies like Yahoo Finance, Zacks, Morningstar, and Macro Trends. All 4 of those will have financial statements that should be free to access in a common form of some sort of another. Now, they may not all have the exact same template or exact same form, like comparing Yahoo Finance to Morningstar may not actually have the exact same line items in each one of those, but if you can compare Apple on Yahoo Finance to Amazon on Yahoo Finance, they will have the exact same line items. So it'll be sales, cost of goods sold, so on and so forth. So our personal favorites is Macro Trends. I find that Macro Trends is just the easiest to understand, easiest to find, and it's not as full of ads as a lot of the other ones are. Now that we know where we're going to get our data, it's time to actually start looking at what ratio analysis are we actually going to do.